Hi James, hi Steve. Thank you for joining me for our January update. To begin the year, there's been a number of significant geopolitical events. What's been happening and how has it affected markets?
Yes, certainly 2026 has got off to a running start in terms of the geopolitical influences. I think we started off with the US abduction of Maduro in Venezuela, then the Greenland issue, which ostensibly has been solved, at least for the time being. And then finally, there's the outlook in Iran, is a little bit unknown at this stage. Broadly speaking, I think we need to distinguish between those geopolitical events which are influential in terms of macroeconomics and ultimately in market pricing, and those which are not, or even those which you might expect to have an influence, but over a much longer span of time. So the Venezuela issue is perhaps influential over a broader period of time than more immediate. The Iran one might be a bit more immediate because there are various things that the Iranian forces can interfere with in terms of oil, liquid natural gas exports that come through the Red Sea via the Straits of Hormuz, which are very close to Iranian control. So there's those two elements. Broadly speaking, in terms of equity markets, certainly in terms of bond markets, the influence of those geopolitical events has been relatively muted. Where you can see a more immediate impact is in, say, oil prices, which have drifted higher, gold prices, which have drifted higher. So the major transmission into markets or into the economy is via the commodity markets. And that's where you've seen a slightly more immediate impact.
So James, what are our expectations for inflation this year? And what does that imply for interest rates?
In broad terms for 2026, we expect inflation to behave itself. We don't anticipate a significant spikes in headline inflation and for inflation to gradually trend towards that 2% central bank target rate. What that means for interest rates is we saw a series of rate cuts throughout 2025. We expect to see two further cuts, certainly in the first half of 2026, from both the Bank of England here at home and in the States from the Federal Reserve.
And in terms of a broad outlook for the US economy, how does it look for 2026?
Well, the US economy has started the year in pretty decent shape. Growth expectations are, below that of historical levels. The US economy is expected to expand. We've seen, the big investment through AI, artificial intelligence. That's really helped broad US economic growth, and the employment market, labour market, has remained in decent shape as well. So I think looking forward, the US economy is in good shape to grow throughout this year.
Thanks, James. So does any of that positive outlook hinge on who the next Fed chair is going to be?
I don't think so. I mean, it's a very interesting question about who the next Fed chair is going to be. We've had, of late, we had Kevin Hassett, who was the front runner. Then it was Kevin Warsh, who was the front runner. And more lately, we've got Rick Ryder. I don't think, though, that the broad outlook that James has just described really hinges on who that's going to be. We know that the next Fed chair is going to be dovish in terms of interest rates. Otherwise, it's not going to be the next Fed chair, broadly speaking. So, yeah, lower interest rates from the new Fed chair. I think that supports the outlook that James has just described.
And we do have the midterms coming up in November. Is that going to be influential?
Quite possibly. So President Trump will turn to the Federal Reserve with the view of them being quite aggressive on their interest rate cuts to really boost that voter confidence ahead of the midterms.
So, Steve, same question for the UK. What's our broad outlook for 2026?
The broad outlook is reasonably positive, at least from an inflation perspective, which has been a problem now for a good 5 years. So it may well be that this is the year in which we see inflation back down to target. There's a sort of stepped profile in the outlook for inflation. I think inflation will probably hover around the 3% mark. Yeah, if it's 3.1 or 3.2 or whatever, that it'll probably hover around that mark for the first quarter of this year. And then there's a step down in the April data when we eventually get that. We won't see that data until May, but there is a sort of stepped profile. And I think there's a good chance that inflation gets very close to the target, if not on target, during April. And then thereafter, inflation sort of hovers around that target level. Maybe it's a little bit below 2%, maybe it's a little bit above 2%, but that's the sort of stepped profile. The numbers I'm a little shaky on, but step profile I think is fairly robust in terms of expectations. What that means is that the Bank of England will be in a position to deliver some more interest rate cuts. So if inflation is at target, the sort of just right inflation target level, then interest rates can be set at the just right interest rate level. And probably that's going to be around about 3.25. Maybe it's 3.5, maybe it's 3.25. So just on the outlook for inflation alone, some normalization back towards target, interest rates will then follow suit. If the economy doesn't hold up as well, if GDP output, for example, isn't positive, maybe we slip into negative figures now and again, then you can expect interest rates to come below that 3.25 mark. So, but yeah, we've had some difficult times with inflation this last few years. This looks like the year that we'll see inflation much closer to target, and that will bring interest rates down too.
In terms of economic growth, is this the year where we could start to see a breakout from that stagnation we've had?
I'm not so sure about that. I think we've got a fairly weak labour market. I'm not expecting GDP growth to be amongst the sort of highest out there, even amongst our peers. But we're finding it difficult to escape from a sort of high taxation kind of environment that we appear to be stuck in. I don't think anybody really expects that to change at anytime soon.
Okay, and is there a risk of political uncertainty starting to creep in also?
Yeah, and that's another element on top of that. I mean, this has been a feature of the UK outlook for a good 10 years now. I mean, how many prime ministers have we had? How many chancellors have we had? And I don't think it would be a surprise to many people if we have a new PM before the end of the year as well. Now, we may or may not have a new PM before the end of the year, but the point is that I don't think it would come as a terrific surprise for either the equity markets or the bond markets, or for us certainly on this investment committee. So, this is a problem. Potentially, this is a problem in terms it doesn't break the track that we've been on for this last 10 years. Let's put it that way.
Okay, thanks for that, Steve, and thanks, James. That's very insightful.